Greetings everybody, let's take a look at the gold market. Well guys, in general, on the fundamental, hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Situation on the gold market hasn't changed significantly. The same factors will press on gold and on other dollar related assets, because now the major expectation from the investors and analysts that overall sentiment and situation in the current economy stands in favor of US dollar and supports the US dollar, and this overall situation is moderately bullish for it. As we said, there are a lot of reasons for that. The recent data in the United States on the economy, fundamental numbers that we've got on the inflation, on the unemployment, on the consumption, and some other. Second is the earnings reports from the United States companies. It in general confirms the improving situation in the United States. Although yes, we saw some really bad reports from some companies, for example from the Amazon recently, but in the most part of the companies have topped the expectation. Approximately the 60-65% of all companies have topped the expectations, and that in general confirms that situation in the economy is improving. Well, also speaking particularly on the gold market, we know that the main analysis tells about the weak physical demand on the gold market, especially when the market climbs higher than the 1320, 1325 area. Its demand decreases significantly, and on the recent week we see that the investments in the SPDR, the fund, has decreased for the almost for 3.5 tons for the week. This is really significant drop. The CFTC recent data also doesn't show any really improving in net long position in the open interest. In fact, they stand flat, and recent thrusting action on Friday mostly has happened due to the new geopolitical tensions escalation situation in Gaza and in the Palestine and in the Israel conflict. Also, the situation is unstable in Iraq, and all you know about the Ukraine tensions as well, and that supports the price on the gold market. But very often, and previously we saw this not just one time, that short-term shakings in the geopolitical tensions rare leads to some long-term action on the market. Usually they trigger some fast reaction, but they fade as fast as they have started. So that's why we should not overestimate this bounce up that has happened on Friday, especially because it hasn't changed the overall bearish setup of the gold market. But still, in the very short-term perspective, in the 1-2 days, this really could lead to some upward action, and that we will talk about on this update. Take a look that on the daily chart, market has formed bullish engulfing pattern right at the 50% support that we have discussed previously. That was the 50% support from this thrust up, and right around the monthly pivot point. So you can see market again has returned right back above the monthly pivot point. So that's bullish pattern that theoretically could lead market higher, and we know that the minimum target of this pattern stands equals to its length of the bars. So if you count it to the upside, you will get approximately the area around 1325 level. It means that this pattern either could work or to fail. The failure point of this pattern stands right now. So if market will return right back down and take out of these lows, this will mean that pattern has failed, and we should be ready for greater downward continuation. Although here on daily chart I draw this big ABCD pattern, but its target is not very interesting for us because it stands deeply out of the oversold situation, and where mostly we'll deal with this ABC tab pattern that has target around monthly pivot support 1 and daily oversold 1270 area approximately. So on the 4-hour time frame chart, we see the trend turns bullish. We also have this bullish divergence with the MACD indicator. That's thrust up. Okay. The reasons for this thrust up also you can see stands with this ABC top pattern, because market as well has hit the 618 minor extension. And also you can see that on Friday market has hit significant resistance. This is for our confidence resistance 1310 area, and it will stand very close to the common weekly pivot point. To be honest, guys, for the bearish perspective, the better situation if market will fail here and turn to the downside. We'll move below the weekly pivot point and then we'll take it out of these lows and we'll continue to move lower. But theoretically, it is acceptable. The ultimate area that we could accept and that will not break the bearish setup is this area, 1323, the 618 retracement that's accompanied by the weekly pivot resistance one. So for example, if market will continue to move higher, will show some ABCD pattern maybe, and will complete the target of the engulfing pattern on the daily chart. That will not be the strategy for the bears, and it will not vanish the bearish setup, the bearish trend yet. Any move above this area, yes, will be some negative moment, and this will be the warning factors for the bearish trend. But until this will happen, market could feel free itself in this area, and it will not break the overall tendency, because we know that the weekly pivot resistance one usually holds the bearish trend with the retracement. Until this will happen, until weekly pivot resistance one holds the retracement, that's okay. It means that market still has the chances to reestablish the bearish trend and continue move lower. So our trading plan is false. Of course, we probably will not get significant action, because many investors will prepare and will wait for really significant events on Thursday and Friday, the FOMC meeting and non-farm payrolls release. That's why the market could look a bit lazy and calm till this will happen. And we mostly will keep an eye on this retracement, and first on Monday we will monitor how market will behave here. So if market will fail here and turn to the downside, in this case we will be watching for this 1287 lows. As soon as market will vanish it means that market will continue to move lower. If market will break through this area, in this case we will have to watch for this area 1323. This will be our ultimate level of this retracement. That's in fact the edge for the bears. So if market will pass through it, that could change the situation on the gold market. That's why this area is very important. But right now, guys, really I do not see some clear patterns on setups for immediate trading on the gold market. I do not know what we could do right now, because no patrons. Well, one moment that could be interesting maybe is on the hourly time frame chart we could get scalp Judd Napoli patron, for example double repo or brand body. If market will form something, because thrust here looks nice, but this is really scalp trade. This really has no significant value for the situation that now we have on the daily and on the 4-hour time frame chart. And that's all. Because the major situation will be clarified probably at the end of the week, and on August we probably will get some more chances and some more clear setups on the gold market.